Alright, what's up YouTube? So for this example, it was a winning trade, which is dope. Um, Anyways, this was the 4 hour was bullish and the 1 hour was bullish for this example. I don't know why my chart is looking so funny, but it's going to take me a second to get this right. Anyways, price had made this 1 hour fair value gap here, which is just a box. That's all I need to really look at. Then I was waiting for price to enter into this fair value gap, which price did with this candlestick. So we can go into the lower time frame. And since the 1 hour and 4 hour was bullish for this example, don't pay attention to this by the way. The 1 hour and 4 hour were bullish. They were in alignment with each other. That then gives us access to the 5 minute time frame. If they weren't in alignment with each other, then we would go to the 15 minute time frame. But for this example, we're using the 5. So price then entered into this 1 hour fair value gap and they gave us a bullish break of structure on the 5 minute time frame here. This bullish candlestick broke this high right here. So after price broke this high, I was then waiting for price to re-enter into the area where price had previously just filled orders. Okay. So this is considered the order block because this is the move down that is causing this move up, this break of structure to the upside. So in this area of this candlestick, that's where orders are being filled. So, I'm just going to make a box here to represent the order block. But this is a pretty big box and it's not really that accurate. I could also draw equilibrium for this box from this low, this swing low, to this swing high, which is what this box represents here. And this basically just makes a double confluence. Since this white line is a little bit lower and closer to the bottom of this order block, which is the area where orders got filled, I would much rather enter based off of this one so I can get a better RR trade. Anyways, I waited for price to come down into this equilibrium, right? Which price did after the bullish break of structure to the upside. Price came down into equilibrium and then gave me a bullish candlestick coming back through this white line, which is enough confirmation for me to enter into the trade. So I enter based off of this candlestick here. Let me adjust this. And I put my stop loss below the order block, below the equilibrium, and below the low that orders were previously filled at. I then put my take profit at a 1-to-1 take profit. Okay. Because I'm not looking for a crazy RR trade. I'm just looking to get in and get out. Price immediately showed bullish pressure, and literally it shows so much bullish pressure that it never even came back to this low. So if I was on a live account and I kept runners, I would be in the green. I wouldn't even know how much money I would be making on the day if I kept on holding, which I think is just a beautiful thing about trading if you just leave runners. But I have a consistency limit on my funded account where you're only allowed to make $30 per day. Um, but it's completely understandable, and that's just what comes with trading funded accounts, and that's just one of the rules. Anyways, yeah, this was a pretty solid trade. I'm very happy with it. That's plus $30 onto my funded account, which I'm very blessed to have that. Um, but yeah, I also took a second trade on the day, and I'm gonna make another video on the second trade. So, but yeah, this was the first trade. I'm happy with it, and I don't really know what I could have done differently, what I could have done better, but I'm very pleased with it. And all I have to do is just rinse, repeat from here on out. I appreciate you for watching this video. You have a good rest of your day.